Hey guys, good evening everybody. Welcome to another edition of the AccessToTrade.com weekend wrap-up show. Hope everybody is doing okay. So let's talk about the market really quickly, and then I want to kind of focus on this very specific lesson. I try to go through every single every single scenario that every single trader faces. Obviously, for your swing trader, you're going to come into a lot of theories and a lot of episodes in front of you, and a lot of situations in front of you. They're going to be different from option traders. They're going to be different from scalpers, for hyper scalpers, for day traders, whatever the case may be. So we're trying to, we try to cover everything in our live webinar every single day. It's 7 hours a day. I speak all the time, literally all the time, and we kind of go through all this craziness that we call the greatest reality show that's not on television. But before we do that, again, it's 2 weeks in a row now. Nothing really is going, or at least nothing really is jumping out in front of everybody as far as broad market movements. Second week in a row, all the major benchmarks, and pretty much nothing all across the board. Down fractions, Dow Jones down 0.3%, S&P down 0.2%. And the NASDAQ fell 0.3%. So nothing really to get excited about one way or another. The one thing, if you are a bear of this market, and you've been trying to rationalize that, maybe something that is more than a knee-jerk reaction since the Trump election is kind of playing out. And the problem is, the biggest theory that the bears had was, well, once the financials goes, once retail goes, the market's going to follow, because if nothing at all, the financials are the ones who led this whole Trump-induced rally to the upside. And now that they're coming in, and then next thing you know, we are going to go lower. So if you look at what the market did today, as far as that theory goes, or at least what the market did last week, you look at a stock like Goldman Sachs, right? And arguably, and we talked about this last week, arguably Goldman is, the blue star, right? It's the shining star of the financial world, represents pretty much everything. It used to be Merrill Lynch back in the day, right? Representing of the bull, but now it's Goldman Sachs, right? It's all about Goldman Sachs. And the whole theory, again, once gold was going to come out earnings, everybody knew that gold was going to beat earnings. The problem was, it was the price action baked in, and if it was already baked in, which everybody really believed it would this finally be the catalyst to kind of sell the news, sell the quote-unquote Trump-induced rally, and kind of get finally our biggest back test that we have seen in a while. Again, nobody's calling for Armageddon. This was kind of the realization of what was going on. And the biggest short killer, of 2017 was not the dry ships, was not the ETRMs. When you talk about global financial short squeezes, right? Short squeezes on hedge funds and pension funds, and all these people who believe that this was too much, too fast, too big of a run in Goldman Sachs. This was the killer. This was the short killer. And once they finally came out with numbers and started back testing, well, right, we're going to sell off, and not so much. Disappointing investor reaction to Morgan Stanley and Goldman Sachs. They finally sold off the stocks, but if you look at what the indexes did, based on the theory as so go the financials, so goes the market, did absolutely the opposite of that. And you have to really be frustrated if you are a perma bear. What is this market going to go higher, right? I mean, when is this market going to finally backtest? And then the other big story was obviously the swearing in of our 45th president, Donald Trump. Whether you were voting for him or voting against him, he's our leader. We have to respect the office. We are hoping and praying that he does a great job for every single citizen and resident of the legal resident of the United States. Obviously, I'm joking around here. It's obviously a play on his whole campaign. But again, he is our leader. He is now the official leader of the real world. So hopefully he succeeds, right? Hopefully he succeeds. And nobody wants an epic failure as, the greatest country in the world, right? Nobody wants that. So hopefully he will be, successful. So, he had the whole speech, more jobs, right? More American jobs, more growth, more infrastructure, more everything, right? Energy and, foreign policy, and being kumbaya with the rest of the world but at the same time being strong and firm. The market, sold off initially in that news on Friday. And then, as we've seen programmed to do, the knee-jerk, quote-unquote knee-jerk reaction, Trump-induced rally, again, is much more than a knee-jerk reaction rally. And now we are kind of, we're kind of das mad in traditionally a very strong quarter, which is, quote unquote, the January effect. And again, you're still seeing these small caps still rallying. And, again, there's no fear. And I keep on telling everybody, especially in the live webinar, yeah, you can find the short, you can find the short. You can find a sneaky pivot, but as you can see over and over again, there's just no aggression to the downside. You'll get that 20, 30-cent move, and then they'll snap it right back at you, $1, $1.50. So again, a lot of times we talk about, is the trade worth it, right? Is the trade worth it? And I think a lot of people, a lot of light bulbs have gone on, especially for traders who've been trading on the short side for many, many years exclusively. They finally realize that sometimes when a stock looks like a short, it doesn't mean it's a short. It's just a stock that's backtesting that is really embraced by the dip buyers. So I want to kind of go into a quick little lesson, right? I was having a pretty solid week. It was a short week. I was having a pretty solid week. And then on Thursday, I lost a good chunk of my week on a Netflix trade. And for those of you guys who are joining this for the first time at home, okay, first time on the YouTube channel or on Twitter, whatever the case may be, go on our YouTube site, go on the previous recording. The previous recording was Thursday, and I kind of did the breakdown of an anatomy of what a bad trade is. Okay. Again, everybody makes on social media, everybody makes videos of trades at work. When you're a professional trader, if you're a professional trader, when you put on a trade, of course you expect the trade to work. It's not a shock. You're not making a video that the trade worked. You're more shocked when the trade doesn't work, and then you're trying to figure out what went wrong, whether it was you were too tier size too aggressive, whether you went too early on an interval, whether you traded on a dead zone interval that you weren't supposed to, whether you chased a channel that was overextended, whether you chased a candle that was overextended. That's two different things, channels and candles. So you have so many different moving parts to try to figure out. And I tried to break down on Thursday's video. And again, this is the video before this one on our YouTube channel. So if anybody wants to check it out, I think you really kind of like the dynamics, how I break it down. But again, that's what professional traders do. We try to figure out why a trade doesn't work. And when it doesn't, we really need to kind of step back and try to figure out what it was. Friday, I rebounded Friday. Again, no revenge trading, nice and calmly. I wasn't trying to hit that 5-run home run. I put on 3 trades. All 3 of them worked. You can really make a case that SWKS didn't work. I made a couple bucks there, but we'll talk about that in a second. But the most important part is, again, we're constantly learning. We're constantly learning. We always reinforce to ourselves that we are our worst nightmare and we are our worst enemy. And we just try every single day to try to make a better us. And no matter how long you've been trading, for 17 minutes or 17 years or somewhere in between, you are always a work in progress. And that's why our story is never told, because our story continues to get more interesting, has a lot more drama, hopefully has a lot more smooth sailing than drama, but we are all products of the greatest reality show that's not on television. So we try to make things better. So the lesson I want to kind of show you guys today, it's not really a lesson. I hate using the word lesson because, again, I don't want to be one of these guys on social media to teach. Everybody's a freaking teacher. I don't understand where everybody got this Twitter right to call themselves a teacher. The teacher is a person who goes to college and then goes to graduate school, gets a degree in education, and then they make $35,000 a year in the New York City public system. So I'm nobody's teacher. I'm just a guy who's been doing this for a very, very long time and just knows what not to do. And that's kind of what I try to convey in our live webinar. For the purpose of discussion, I want to kind of discuss what the anatomy of a great break-even trade is. And a lot of times somebody will turn around and say, wait, what? Break-even trading. I've seen videos on good trades. I've seen videos on bad trades. And now this guy, Dan, is talking about an anatomy of a break-even trade. The greatest thing about what we do as professional traders is we're in control, right, guys? We're always in control. We're always trying to get that edge to, no matter what happens, win, lose, or draw, we're under control. We can literally shut down our computer every single day and say to ourselves, even though we made money, were we in control? Even though we lost money, were we in control? Did we take a situation that was, for example, a paper cut, right? And did we turn it into a severed head? And all those questions, all those answers are no. We did our job. Because again, if you're a professional trader and you have money at risk and you have your risk tolerance, you're going to have losing days. It's just a matter, it's just a matter of reality. When you're on social media and you see every single day everybody's having fun and high-fiving each other, I don't know what they're doing for a living, but sure as hell not the same thing that I'm doing for a living. And I've been doing this for a very, very long time. So when you have a situation that you are in control, And one of the greatest value trades is that flat trade. You really appreciate what your process is. And again, your process doesn't need to mirror mine. My process works for me. Your process could work for you. But whatever you're doing is, don't you need to have the ability to be in complete control of what you're doing, right? It's just a rhetorical question. But the reality is, no matter how you trade or what you trade or what vehicles you decide to operate, you have to know what you're doing and be in complete control of doing it, or else you'll crash that vehicle. So one of the greatest trades that I have throughout the week is the flat trade, right? Is the flat trade. Now, what's so great about it? Okay, what's so great about it? So let's take, for example, this was my third trade of the day. Okay, this was my third trade of the day. I traded only small caps, only a couple of small cap names on Friday, only because of the high beta names are just dead, just completely dead. You had Netflix kind of, up a little bit, but kind of just died out the rest of the day. You have Tesla still digesting some good gains, very, very strong. We'll talk about Tesla tomorrow in the live webinar. Google still just can't get out of the range. The liquidity there is kind of garbage. And Amazon's just kind of all over the place. It's strong and then it's weak, and Facebook's kind of strong and it's weak. So the high beta game wasn't really working. I caught this little stock IRG for about 15-20%. I still have half size on one of these shippers, OMM. I did okay there. And my third trade of the day was this SWKS. SWKS had this really, really big move up $10 on the day. Now, when you're trading intraday, again, when I'm trading intraday, I am looking for a very, very definitive edge, okay? And as everybody knows, I invented something called the PS60 theory, which are pivots that are confirmed and through 60-minute channels. So every single candle that you see, right, and this is 1, 2, 3, 4, this is the first 4 candles of the day. So this is the first 4 hours of the trading day. And what does that mean to you? Well, if you've never traded off the 60-minute chart, you're saying to yourself, well, what's the deal with these 60-minute candles? For me, every single candle tells a story. There's a highest point of the candle, the lowest point of the candle, and something in between. And when you're a new trader, right, you are focused on the top of the channel, whether you're trading on a 1-minute interval, a 1-second interval, or whatever the case may be, and the bottom of the channel, right? Everybody says, well, short the bottom, buy the top. For me, we've discovered something that is the greatest value in the market, and that is the sneaky pivot. You see me kind of tweet about it, and a lot of people are like, what the hell is a sneaky pivot? Why is it a sneaky pivot? Well, you can't figure it out if it's a sneaky pivot if you're trading on the 1 or 5-minute channels, but when you're trading on a 60-minute interval, there's a lot of value within that range, to the top and to the bottom side. So if you look at the chart, on SWKS, you can see the top of this candle right here, okay, not the high of the day, but the top of this candle right here was 88.48, right, guys? 88.48. The next candle high was 88.43. So we needed one more candle, right? We needed one more candle, which is roughly around the 3 o'clock hour, with roughly about an hour left to the close. We needed one more candle to confirm these two and start building a base above 88.50 for a possible run, right, at the day's high, and then every other trader would jump in at the day's high, and hopefully you get this over-exaggerated move to the upper channel of the next supply zone. So we buy SWKS, okay? We buy SWKS, and the stock goes up, about, let's just say about 30 cents, right? Goes up about 30 cents. And the problem with that move is, it didn't take out the high of the day, okay? Now, why is that a problem? Well, stock is up $10 in a day, okay? Stock is up $10 a day. So if the stock retraces back $2 on the close, if they pull the rug, and the stock is only up 8 points for the day, the stock still had a really good day. The company had a really, really good day. If you're a day trader and you're buying the stock at 88.50, right? If you're buying it at 88.50 off this channel here, you are really fighting the clock. Now, why is that important? Okay, in my opinion, when you're trading a stock that's having a really, really aggressive day, there's always somebody there, okay, to take profits, and there's always somebody there, whether they're educated or uneducated short seller, that's coming around and saying, well, the stock is up too much today, they're going to sell it into the close. So you have those two elements, right? Those two elements that you're fighting. So what you're looking to do is really understand that the range needs to be confirmed, the range needs to be built, and if the stock doesn't go and doesn't take out the highs of the day within a 5-10 minute interval, you have to get out. Because if the buyers get exhausted at that level, think about that, guys. If the buyers get exhausted above the new range, there will be an aggressive pull, right? There will be an aggressive pull. So what happened is the stock going up 30 cents, I wasn't doing the trade for 30 cents because what I thought was going to happen is I thought they were going to take out the stock, take out the highs here, 88, 90, and they were going to push this thing, $90, $91 area. And unfortunately for me, that didn't happen. Okay, it only went up 30 cents. So I wound up only taking about 3 cents on the trade, literally, because when the stock came back and stopped out. Why is that a good trade? Okay, why is that a good trade? Well, number one, you're in control. Okay, number two, you are not trying to figure out what the closing price of the day is. All you're trying to do is win that interval. Okay, we're not trying to win the war. We're not trying to figure out the closing price. We're trying to win that interval. We're trying to put ourselves in situations that if we're long, the buyers are cleaning up the sellers, and if we're short, the sellers are cleaning up the buyers. Unfortunately for us, right? Unfortunately for us, well, at least for me, I know some people in the room who did take fractional profits, 25, 30 cents, which again, for me, it just wasn't worth the trade, wasn't worth the risk reward, buying a stock of $10 for a 30-cent move. But again, each his own. And I always say, and I always encourage, especially new traders in the room, you're going to get a pivot. You're going to get price action off that pivot. Most of the time, you're going to get cash flow. If you're a new trader, you should build up your account. So absolutely take every single pivot and try to build cash flow, because that's how you build up your account. But for me, I wasn't doing it. So I was giving it every opportunity. It gave it every single opportunity to succeed. And the stock just couldn't take out the highs of the day. Couldn't take out the highs of the day. And I got stopped out, literally made 3 cents on the trade. And the stock went down about 80 cents. Everybody see this candle here, guys? The stock went down about 80, 90 cents. So again, you have two thoughts of process, okay? You got to ask yourself a question. Are you in control? Well, if you stop out, break even, and give yourself every opportunity, for the stock to really run, number one, you got to check it off. You're in control. Now, if you let the stock go lower, right? If you let the stock go lower, what is your stop, right? What is your stop? Because the next rising support is this whole green line right here, right, guys? This whole green line right here. And the stock could have went down to 87, 86 and a half dollars. So so what we're trying to avoid is being in that situation that we are hoping and praying that the market gods will help us and the market gods will bail us out, because we weren't there to ready to take full control and full emphasis of the trade or the price action, what it was telling us. So instead, we were like deer in headlights and hoping the stock was going to go by. Again, we're not looking for, the closing price. We don't want to be right. We don't want to be right in direction. We just have to win our interval. And on this juncture, right, the proper read was take the break-even trade, because again, as easy as it sounds, well, the stock could have went down 80 cents, the stock could have went down $1.80, and the stock still would have been great for Monday's setup. So, here's an area of the market that a lot of people don't focus on. Everybody always focuses on the winning trades. And I say this again as the day is long. Everybody who's been doing this professionally since day one, if you're trading from 98, 99, 2000, 2001, and you're still doing this for a living, you expect to make money, right? You have that quote unquote God complex that every single thing you touch, you expect to make money. That's the furthest thing from the truth, right? That's the furthest thing to the truth. And I wish every single thing I touched, I made money, but it's not the reality. You're going to have days like I had, for example, on Thursday, that every single thing I did was wrong. Right? Was wrong. So the reality is we are not trying to, reinvent the wheel here. All we're trying to do is keep the train on the tracks going forward. So when you look at the dynamics of a break-even trade, that's part of your DNA. That's part of your trading DNA. A lot of people don't really fully evaluate how impressive a good, solid break-even trade. They only look at the downward trades and they look at the upward trade. But the trades in the middle that are saving you money, because again, guys, I say this all the time, okay? It's not the money you make, okay? It's the money you save. That's the value in your account. And once you start getting out of that social media mentality, 200 trades a day, everything is great, low floats, schmo floats, all this stupidity that these random avatars are, throwing down your throats, they're showing you that's trading. Again, if that's trading, I'm not doing the same thing for a living. I'm sorry, I'm just not. So the reality is a good, solid break-even trade will give you value to your account, will put you in a situation to win. And the most important part is it's going to extend your shelf life and longevity. So every single time when you put on a trade, guys, especially for the newer traders, always ask yourself a question, okay? Is the trade worth it? What I mean by that is my risk to reward properly identified? Okay, is the market weak and I'm trying to buy stock into strength? If the market is strong and I'm trying to short a stock into strength, Are these trades worth it? Is the dynamics of the setup giving you whole cards, basically giving you aces, queens, kings? Or is the setup so lackluster that I'm trying and I'm always literally forcing myself to play a 2-7 offsuit? These are all these different elements, guys. These are all these different questions that a lot of traders completely avoid, because the only thing they're looking at is some guy again on random avatar telling you with 25 different tweets within a 5-minute window why his stock is the one to buy. Okay, that's not trading. That is buying a stock and hoping there's more money in your account than you started and than you ended with. So most important thing, guys, there's so many moving parts. There's so many gray areas of the markets, and I say this all the time. For those of you guys have been, trading for a very small period of time. Again, always, guys, we always think about this. Always lead with your shield, not with your chin, and that's how you extend your shelf life, and that's how eventually the light bulb goes on and clicks at the end of the day. So hopefully, this little discussion helped you guys out. Obviously, you guys. All you guys in the live webinar, we go into everything much more detail, and we do it in real time as the trade is going on, so you can hear and see exactly why a stock works, why a stock didn't work, and why we possibly, being a human being, could easily mess up a really good setup. And all these things are just individual channels that build up what we do every single day as professional traders. No matter what you trade, it's very important to identify all aspects of what possibly could happen, so you can be smarter for it, not make the same mistakes for the next day. So let's get into tomorrow. Let's get into a couple of setups that I do like. You might as well start off with SWKS. Again, very tight channel on the 60-minute, guys. Let's talk about the SWKS really quickly. It's a pretty visually easy setup to to kind of appreciate. Again, will the trade work? Will the trade not work? We don't know, but you can at least see the setup. Okay, here's the top of the channel here. Here's the 60-minute flag. Really not a lot of creativity with this setup here. A break of this 88, 90, 89 level should get this thing up to the 61.5 level. Again, look at your risk reward in the stock, guys. Okay, your risk reward in the stock is literally 30 cents. If it fails the whole number, you're risking 30 cents on the trade for a possible $1.50 move. So good value there. Definitely keep an eye on SWKS. Look at G, guys. Keep an eye on GPro. Look what's going on with GPro. All of a sudden, GPro has life. Again, I don't know how much life it's going to have, but it has a little bit of life. Look at the chart on the daily chart, right? Look at the chart on the daily chart here. Not a bad looking chart here. Not a bad looking chart at all. You have multiple tops here, 960, 960, 955, 954, 955. So 960 break can start getting this thing to the 50-day moving average. And you never know what this thing, maybe it goes on a multiple day run to 11, but at least it has a very good measured response if it starts building over that 960 level to that $10 area. So definitely keep an eye on GPro. And every dog has a day, and we've seen over and over again how important it is to find value coming off the bottom. A lot of our swings that we put into the channel over the last couple of weeks have done very well coming off the bottom. Your Herbalifes, your Cerners, your GWRHs, CL, all bottom charts in GPro look exactly like that as well. Fastenal. Fastenal looks really good. Okay, Fastenal looks really good. Had a big move up on Wednesday, rested on Thursday, moved up a little bit on Friday, and moral of the story is, guys, set an alert on Fastenal above this area, 5156, right? 5156. So keep an eye on that. AIRG. Okay, keep an eye on this thing. I usually wouldn't pay a lot of attention on a $17 stock that looks like this, but look at the float. 1.5 million float. The stock stopped at the 50-day moving average. If this thing gets above 1770, 18, who knows? 1.5 million float. Look at the volume expansion here, guys. So definitely keep an eye on that as well. ENPH was a nice trade we had in the room this whole week, actually. This whole week, for all you guys who bought it, off this area right here, off this 150 area, and I traded it several times. This 150 area. Has moved to $2. Set alert again, guys. I think a move above this $2 area. I think the stock goes higher as well. And for all you guys who are like these little cheapies, keep an eye on this DSS. Okay, keep an eye on this DSS as well. Flagging nicely. You have expanded volume. Set an alert for this thing off this 95-cent break. keep an eye on that as well. For all you guys, obviously, who trade high beta, get in the room tomorrow early, 9 o'clock Eastern time sharp. We'll definitely talk about the pivots in Tesla, Amazon, potential pivots in Netflix. I'm still not giving up on Google. I'm still not giving up on Google. Unfortunately, Google is literally turning into Priceline right before my eyes. I'm not giving up on Google. I do believe there will be one more great run in its character, hopefully before our lifetime is over. But again, we'll see. We'll see. So, guys, have a great night, everybody. I hope everybody kind of really liked these little discussions. That, again, if you want to see the breakdown of a pretty bad trade I did on Thursday, okay, on Thursday's session, again, just go into our archives, the video right before this one from last Thursday. You'll really understand what I did wrong there. And again, we're going to try to give little mini, I hate using the word lessons, but mini, I guess you could call them lessons, right? Many lessons of exactly what happens in the market. I'm never going to do a video of what a stock works, when a stock trade works. It's supposed to work. That's the whole point. But we always want to show everybody that everybody's human. Everybody makes mistakes. Everybody gives each other self-inflicted wounds, and we're all imperfect, just trying to get better. So, guys, have a great weekend, everybody. Great Sunday. Enjoy the Pittsburgh New England game. Go Pittsburgh. I'm a New York. I'm a Jet fan. I can't root against. I can't root for the for the Patriots. Guys, God bless everybody. I'll see you on the field tomorrow. Have a great night, everybody.